Hello and welcome to BQ Prime. I'm Hiral Daria. Let's discuss the stocks in focus today with Sharmila Joshi of sharmilajoshi.com. Sharmila, welcome to the show and a very good morning. Sharmila, my first question coming to you overall is let's discuss initially the stocks which are seeing a MSCI rejig. Firstly, you have Biocon, which is being excluded, whereas you have CG Power and Industrials and a Sriram Finance that are being included as well. So, firstly, your view with regards to the rejig, number one, and number two, in terms of what would your view be on these three counters?
So I don't know if you follow Mr. Samir Arora on Twitter, but he's put out a very funny tweet with this whole MSCI rating, and I think that sort of captures the way I think about it really, because he said that MSCI should take money from the exchanges for the amount of volumes they generate with all these rejigs. So first you have an announcement that says the rejig is going to happen, and the weightage here could be cut, here it could be added. So traders typically take positions on the basis of that. What is going to get cut gets sold, what is going to be added gets bought. And when the actual rejig happens, then everybody reverses their trade. So I think, in a nutshell, that is really what happens. So I don't think that we can really take an investment call based on any MSCI addition or deletion. You have to view the stock for its fundamentals, whether you like it or not. Yes, of course, I think if a stock is included, it is good news in a sense, because because it has to pass through the parameters for MSCI to consider it worthy of being included. From that point of view, definitely for CG Power, it's a plus. But when it comes to Biocon, I think anyway, results have been disappointing. So I don't think that's a stock that too many people are looking at. And then that leaves you with Sriram Finance, which I think is okay. It's definitely, I think, in terms of numbers, etc., it seems reasonable. So I wouldn't be in a hurry to sell it if I was a long-term investor based on this news. But really, I think, big takeaway. I think the big takeaway this time in the region was more to do with the Adani stocks, because people were tracking that news flow very closely. And I think for that group, it's definitely a sort of a negative, because I mean, it seems to somewhere point out to the fact that what was mentioned in the Heidelberg report, that to do with the free float and the holding, MSCI seems to agree with those concerns, and which is why they have marginally cut the weightage on those stocks.
Right. So that's the view coming in with regards to where the MSCI part of it goes. Moving on, you have two pharma names as well, Sharmila, that reported numbers as well. If you talk about an Aurobindo Pharma as well as a Lupin, let's look at Aurobindo Pharma first. Clearly, the profits have dropped around 19% overall in terms of Aurobindo Pharma. What's your view? Because clearly, and on top of that, they're looking to pay a 300% interim dividend per share. So, what's your view in terms of earnings for an Aurobindo Pharma, and what would you advise an investor to do?
Very honestly, with Pharma, it's been a bit of a hit and miss. And if you were to look at the yearly returns, I mean, I'm talking of the sector as a whole. If you were to look at the kind of returns they have, once the tailwind of that whole pandemic situation was out, where you did see a lot of demand coming in for paracetamols and what have you, all those drugs which were used for COVID at that point in time, that sort of had given Pharma a new impetus. But I think once that was out, over the last year, I think barring one or two names, you don't really have any pharma names which have given you positive returns. So coming to Aurobindo, and I think more importantly, in this earnings season, we've seen a lot of margin accidents. There have been a lot of companies which have disappointed on margins. So I think it's a sort of a neutral stand on both Aurobindo and Lupin. I think both have their pluses and minuses. I think Aurobindo is up today because they have some new US FDA approval, but there is nothing really in the numbers to take away from. Yes, I think in terms of valuation, probably Aurobindo looks a little better to me than Lupin at this point in time. But having said that, I don't really think that they would be on my value list.
Right. And similarly, that's the view coming in for Lupin, because a 72% drop in profitability. And again, yes, this is due to a high base in the corresponding quarter last year. But from a valuation perspective, do you think this could be a time to start nibbling, or do you think it's just a wait and watch yet?
Yes, I think precisely as you said that you saw the drop in earnings, but that was because of that higher base where they have one tax benefit or whatever. I think even if you remove that, it's a sort of a flattish number as far as profits is concerned. And I think in Lupin, in that sense, probably numbers have been a little better, and that whatever that positivity is reflected in the valuations, because I think in that sense, Aurobindo valuations to my mind look better than Lupin. So really, no big takeaway from either. I think that for me, both are really in that neutral space, and you will probably see them move up or down on the basis of a news flow from US FDA or some new launches or something like that. But much more than that, I mean, if you have them, you can hold them, but there is definitely no fresh buy on either.
Right. Moving on the earnings radar, you have a Voltas which reported a net loss. However, the profitability was impacted due to a provision of almost 137 crores that was made on the back of an overseas project. Revenues have gone up 12%. EBITDA has declined. In fact, the margin has come in at 3.8% versus a 8.7%. What's your view on a Voltas? Because clearly, if you see in terms of the stock price, that's not really reflect the performance in terms of the numbers, right? And over the last 6 months, the stock is down almost around 15%.
With very good reason, because I think starting with the first quarter numbers, you have seen a disappointment from Voltas, and honestly, this was a stock that I like, but I think now I'm of the view that I need to wait to see some some sign, because at the end of the day, let's forget this the money that you pay for whatever that overseas bit. But even if you look at the unitary cooling numbers and the kind of market share that they have over there, that doesn't really reflect any like really any great sentiment that would mean that the stock could be bought. So that's been the disappointing piece for Voltas, that the unitary cooling products they've seen their market share go down, and they've not seen good numbers from there. And now this is, I think, almost the 9 months where we sort of seen disappointing to flat numbers where that piece is concerned. So I think that concern is getting reflected in the stock price. And I mean, you can argue that the last quarter was not such a great quarter for unitary cooling products, given that it's winter and etc. etc. But even in the peak season, they did. That's when you had seen that first hit on Voltas, and you had not seen good numbers from the unitary cooling bit. So I would wait to see some improvement there. Honestly, for me, this has been a disappointment.
Right. Moving on, LIC reported an interesting set of numbers, because if you see in terms of the profitability, a multifold year-on-year increase that we've seen on the back of strong growth coming in there. How would you view LIC? Because if you see in terms of the stock price, yes, today we're seeing gains of around 1.5%, but clearly the stock has been an underperformer in the last 1 year as well, with a degrowth of 28-29%. Do you think this is the start to a good story for an LIC? How are you viewing it?
Well, first of all, as you said, that when it got listed, it wasn't like the best market to get listed in, and we never really seen the stock, get the kind of reception that some IPOs do get. That again, also, I think that to my mind, insurance as a sector has become like the new ITC in the budget. Every budget you have some or the other sort of not so positive news coming in for insurance sector. And this budget too was not particularly great for this sector. Of course, I think having said that, LIC probably is the least affected among the players in the listed players as far as that piece is concerned. Numbers have been good. Again, I think the other that part they tick the boxes, and I think that consistently the numbers have been good for LIC. So that part I think remains the strong bit for them. What I would have liked, honestly, this time around to hear from the management is some clarity on their Adani holding, and whether they have they could throw any light on the subject, because at the end of the day, what do you and I we follow the news flow that the investors who are in the space would throw light on some of the recent developments and sort of give you some sort of signal that things are okay, because they are invested. But unfortunately, we didn't really get any of that from them. I believe they said that they haven't had a chance to speak to the management yet. So that was a disappointing thing.
Right.
So I like insurance as a space, but again, I think probably my preference would be for the private insurance space.
Right. So that's coming in terms of insurance. Moving on, Sula Vineyards, in fact, reported a strong set of numbers. Since listing, the stock itself is up around 24-25% overall. Now, what do you make of this? Do you think because the capacity addition plans that the company has, the kind of growth they are targeting, do you think this is still a good time to enter the stock? What would your view be and what would you advise an investor from a valuation perspective?
From a valuation perspective, it looks a little expensive, but yes, I like the news flow. I like the fact that they had they had very strong revenues in the month of December, and it can, if this is a trend, then it will reflect over the next couple of quarters or months or whatever, where you see that shift of preference towards wine drinking, and the capacity addition, as just whenever that takes place, what that means. So I think those who have it hold it, but from the present price point as well, it looks a little expensive.
Right. Moving on, we have a couple of minutes more, Sharmila. One sector I want to pick up right now is in terms of metals. Today, you have Hindalco, Tata Steel, JSW Steel, all these three counters from Nifty 50, which are trading under pressure. We're seeing cuts of almost 1 to 2.5% coming in there. What's your view overall with regards to the metal pack as a whole?
Very confused, very honestly, because I think that first you had them at prices which made valuations look very attractive. Since then, we saw an uptrend in prices. Then we had confusing data coming from China. And this is one sector which is not particularly insulated from international news flow, international prices. So you need to always keep tracking that and keep it at the back of your mind, irrespective of how they're doing, in terms of numbers from a domestic perspective. And even numbers have not been that great this quarter. I think we've had some kind of a disappointment from Tata Steel, Hindalco also. I think the subsidiary news was not so good, and the stock prices have gone up. So it's a slightly confusing space. Again, I think from a longer term perspective, I'm positive on a Hindalco, on a Tata Steel, on a Jindal Steel and Power, and a JSW Steel. But I don't really want to get into this daily up-down sort of movement that is happening in this space.
Right. And one last stock I want to talk to you about is a Paytm. There has been, large block deals that have happened on a Paytm in today's session. The stock is under pressure. Almost around 2.15 crore shares have exchanged hands in a single bunch trade. Overall, think the way the stock has been moving, and recently we did see a double upgrade coming in on a Paytm as well by one of the brokerages. Does it actually signal a full recovery to the IPO price, or do you think this pressure is expected to continue and this is not the time to actually look at it?
I think a lot will depend on what those who had already bought the stock, how they view things, because the pressure, apart from the fact that numbers etc. have been indifferent, except this quarter where we saw a good set of numbers, and that was very heartening. But I think the selling has also come from their anchor investors who, once the lock-in period was over, you've seen them come and sell. So a lot of the stock price will also depend on that, because when they come and sell, there is an overhang, and anybody, unless they find anybody, even the buyers, even if it gets matched, there are no really fresh buyers left in the stock. And in terms of numbers, I think it will be a couple of more quarters before they can really sort of walk the talk. And they had a conference and they said that this is going to be how we will sort of show the kind of performance that we'll show going ahead. And they seem to be walking along that path, which is very good news. But to really recommend it as a buy for me, I think it's a little bit too early. I would at least wait for another quarter.
Right. So that's the view coming in with regards to a Paytm as well. Thank you, Sharmila, so much for joining us on the show and giving us your views in terms of the movers and shakers in trade today. Thank you. Stay safe and speak to you soon again.